This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This lecture is on chapter 24 of the free lecture notes, which is on integrated reporting. And it's only a short chapter and there are no numbers involved, and this is only going to be a short lecture. But what it is this. At the moment, standardly, the financial statements we produce, the statement of financial position, the statement of profit or loss, maybe statement of cash flows and so on, they're very much looking at financial information and they're looking at past information. You know, a statement of profit or loss is showing how much profit we made last year. Now, bearing in mind there are lots of people using the information, lots of different users, the shareholders, employees and so on. There's more and more of a push to give more information that's useful, and surely what people are much more interested in is not so much how we did last year, because last year's finished. So whether we made a profit or whether we made a loss, it's too late. What people are more concerned about is the future. You know, how likely is the business to do well in the future? That matters to shareholders, that matters to employees. You know, we want the company to do well in the future. It matters to everybody. And so integrated reporting, there's a move to give more information, to still give the standard financial statements, statement of profit and loss, statement of financial position, but in addition to give more information about how the business is going to create value in the future, create value for the stakeholders, create more value for shareholders, for employees and for the world at large. And so that's what we need. Still, I say, give these standard financial statements, but give this extra information. How are they going to make value in the future, and not purely financial information? Now, there's been lots and lots written about this. You don't need any great detail, you just need an awareness. But if you turn the page, it says the capitals. How is the business going to improve its value, create value in the future? Well, the capitals are the resources that they're using. And to be safe, do learn what these capitals are. The resources to help them do better in the future. There's financial capital, the obvious one. Actually, what we normally talk of as capital is the money they've raised to invest in the business, from shares, from loans, whatever. And obviously that's being used, hopefully, to improve the business, to create more value. Additionally, though, we talk about manufactured capital. And what we mean there is the assets in the business, the tangible assets of the business. Not that we've manufactured, others have manufactured, but things like our buildings, our machines. We need to look at those. It's those that are going to produce our goods and create value for the future. In addition, intellectual capital. You remember in an earlier chapter I talked about non-tangible assets, and that's really what we're talking about here. Does the company own patents, copyrights? They're intangible assets, but it's something, again, which the business will hopefully be using sensibly in the future to generate more value. Human capital. To do well in the future, to create more value, to make the business do better. It's not just finance we need. We need skilled staff, loyal staff, the workforce, motivated employees. Well, we need to think about them. We need to report on them. Our financial statements, in addition to the pure financial ones, we should be reporting on our employees, our patents, our assets, and so on. Social and relationship capital. It's another asset, or it's intangible. Another asset which can help us do well in the future is the relationship between the business and the customers and the suppliers. You know, how well are we getting on with our suppliers? How loyal are the customers? Because we need that. The more loyal our customers are, the more we're going to be able to create profits, create value in the future. And finally, the natural capital. What I've written, all renewable and non-renewable environmental resources that are used or affected by the business. You know, some are obvious, like an oil company needs access to oil, a natural resource. This will be reporting on the availability of oil, because that will affect how profitable we can be in the future. But all the resources that we're using, air, water, land, minerals, forests, stakeholders, the world at large, they're concerned about how ecological we are, how well we're using, treating the environment. So that's essentially it. The last paragraph is repeating what I've already said effectively, but integrated reporting, to go right back to how I started, is still showing statement of profit and loss, statement of financial position, but instead of it being restricted to that, just looking at the financial side and the past financial, what happened last year. We should be examining each of those capitals, reporting on them as to the effect on us, how well we're using them, and primarily how they'll help us to create value, to increase profits, to increase the value for all the stakeholders in the future.